Hi, I'm Sameeksha Goel for the New Indian Express, and this is Business Unboxed, where we take the hottest topics from the world of money and break them down for you piece by piece. Over the past few weeks, we have looked at why there has been a massive rise in fuel prices and how electric vehicles could result in large savings for commuters. Now, we already saw that the price of an electric car is quite a bit more expensive than a conventional vehicle. But EVs are rapidly closing the gap, and it isn't only the massive rise in fuel prices that is helping. Over the recent past, most Indian automobile manufacturers have rolled out multiple price hikes. In just the last 8 months, the price of automobiles has increased by as much as 5 to 7%. And Maruti Suzuki, India's largest car maker, has hiked prices thrice in this period. Once earlier this year in January, then again in April, and once more in July. And so have others. Mahindra & Mahindra has also hiked prices 3 times this year. The latest hike made earlier this month saw prices of its SUVs rise by up to Rs 1 lakh. Almost all other OEMs like Tata Motors, Toyota and Honda have either hiked or have announced hikes this year. Now that is the reality. But how did we get here? And why are prices rising? Experts place the blame on a combination of factors. The rising cost of raw materials, very high semiconductor prices due to the chip shortage, the transition from BS4 to BS6 emission norms, and rising shipping costs. Auto majors, for instance, have repeatedly flagged the rising cost of raw materials over the past few years. Prices of crucial metals such as steel and aluminium have hit the roof. The price of plastics, another major component, has increased by 40 to 100% in just the last year. An explosion in demand for electronics after the COVID outbreak has also heavily strained chipset production, causing global shortages and a massive rise in chipset costs. And since electronics comprise a major chunk of all modern automobiles, this rise has begun to reflect on retail auto prices too. As for the transition to BS6 norms, which happened in April last year, the industry has spent billions of dollars to upgrade production lines so far. And these are costs that are being passed on to the customer. Another problem is the effective rate of taxation on automobiles. Industry heavyweights, for instance, have also pointed out that the GST on vehicles in India is far higher than other major economies. However, while commodity price rise and high taxation have been a constant problem for a few years now, the pandemic has made the former a far bigger problem. How big a problem, you ask? Well, analysts say that just over the past year, the price of key input commodities have shot up by as much as 40 to 50%. And this isn't a problem that has run its course, even though auto prices have been hiked several times already. Because analysts say that unless this rise in the prices of key commodities is reversed or halted at the least, we may well see even more price hikes in the future. If you like this video and you would like us to break down more such topics, please hit like and share widely. Thank you. See you in the next video.